Good Friday, everyone. Happy Friday. Today, Friday session, a very brief one to go over the price action on the equities market. This time, we did one stream recently on the S&P, on Bitcoin. Today, we're going to be touching the levels on the S&P 500, potentially NASDAQ as well. Before we dive into the technicals, I would like to make a few comments based on the current information as well as the previous information based on harmonic ratios that we were tracking on the S&P 500 as well as Bitcoin. Okay, the levels that is important mentioning why is due to the headlines I see on the news. We are seeing Mike Wilson, the perma bear, now becoming a bull at the highs, and it's quite interesting the behavior of market participants, whether they are pseudo traders, market commentators, and so on. Why the title in this chapter is called Buy the Dips versus Sell the Rips is due to the following. Based on Mike Wilson, his interpretation is that a 5% correction is considered a buy the dip opportunity, okay? And my question to him is, generational wealth at these levels or at these levels back in 2022? I know this chart is getting old, but only to portray the current sentiment in the space is worth mentioning what those levels are, okay? This is the chart, the major one on the macro from December the 5th, 2022, okay? Why this chart is very important is due to the same information that we're having as of now, okay? Conditions on the macro hasn't really changed, at least on the equities market, and maybe not even for BTC. We're gonna be diving also in the details or on the details for Bitcoin as well, okay? Mike Wilson, extremely pessimistic. This is important, my friends, okay? Calling for a major crash at the 3,000 region. We also know who in the space were having a similar interpretation back then. However, after the highs from 2022 to 2022, the sentiment is extremely bullish at these highs. However, what happened after we completed the projection from 2022? We completed an ABCD structure, a major one that created this drawdown, the major decline that we perceive in the equities market as well as BTC. Okay, this is based on the weekly time frame. Now, new information, we're gathering new variables now. Okay, so this is why buy the dips or sell the rips. We'll see. In the short-term trend, clearly a significant turning point after achieving the projection once again from 2022 to 2024. December last year, we achieved those levels, and since then, we created a major turbulence towards the 4800 region, also within the cards. Okay, so now new information. Moving back into a daily time frame on the S&P 500, we were aware of the previous overhead resistance, now potentially back testing as resistance for now. Okay, we also mark the intersection between price and time for May 19th here. Okay, this axis or time axis corresponded for the Fibonacci time analysis that we were previously discussing. Okay, what occurred? We had a previously a W formation, a bearish Garley based on Larry Pesaventos. For those unfamiliar, Larry Pesavento is a veteran Garley pattern trader, as well as geometric patterns in general. And the 0.886, where I was personally looking for a short opportunity at the PRC or at the 6013 for a pending bearish spot. Where did we go? 59 and change, right? 59.94. Instead of testing the 0.886, we tested the 0.87. How annoying is that, right? Very annoying. At least in the short-term trend, to capture this move on the ES, on the index, or in the S&P futures. 4% decline. That, my friends, is a significant amount of capital for one contract, equals to 247 points. Okay? Times 50, of course. 1 second. So now, this is what we have. There seems to be some issues with the microphone. I hope this is not the case again. Nevertheless, let's try to finish what we have here in the price action for the S&P 500, okay? If there is some issues in the noise, I apologize. I hope this is only temporary and it can be fixed on the stream. The next intersection between price and time, if this is only a corrective phase, if this is, again, only a corrective phase for a new developing trend, a new emerging trend, then we know that we're looking for June the 5th, June 17th, where ideally, if this is only a correction, why? Because we're now having the narrative again this morning based on the news with the UE and the tariff, right? However, the charts were already presenting turbulences in the price action, okay? So therefore, if indeed this is only a corrective phase before a new support level is found where either between the gaps, the open windows, also mentioned 2 streams ago, either depending on the resistance levels, we then are going to compute either support levels at the first gap that we nearly tested this morning. 57.34 is the main gap. The next one goes to 53.58. Okay, that is a region for ideally new support levels based on market structure. Higher highs and higher lows. Okay, so far we are on the macro, we printed a lower low. Okay, now a lower high. And if it's indeed a new emerging trend, maybe a higher low before another higher high. Why the new higher high? Based on the price action on BTC. Considering that Bitcoin is a risk-on asset, then the premise is that the equities market may follow, right? Will that be the case? I do not know, my friends, okay? Again, next intersection between price and time, June the 5th, okay? Pay attention to those levels as we head into the tariff taking effect in June the 1st, okay? Moving into BTC, okay? Not much to talk here. On the macro, we know that we achieved a major projection, okay? That is still there, it hasn't changed. And the overspill, we mentioned that heading higher than 63 or 64 erases the other argument for the major pending cipher. This is a time where either the buy the dips or sell the rips will, in my opinion, take significant relevance, okay? Why? Because we now have new all-time high callers, right, at the size. Pretty obvious. How many were calling for new all-time high at the lows? Not many. Mike Wilson? I don't think so. Anyways, therefore, moving into the next intersection, June the 5th being the nearest one. Now jumping into Bitcoin very briefly, what do we have in the chart? Also, I would like to make a correction on BTC, considering that I mentioned before that I was completely wrong. I'm going to take that back. Completely wrong in a sense that how high this upward move would go, okay? We did know that this move was within the range from the previous high to this low back to these highs. Let's revisit that chart only briefly to get out of the card, but it's important for me to give context to not present a wrong interpretation of the technical information, okay? The idea on Bitcoin based on January 21st, back at the all-time high at 109, okay? This one was the interpretation back then, that a decline would occur to 74,000 before another upward traction, okay? And this C leg of the move was always the unknown factor. Of course, being two steps ahead is always a complex task to identify key turning points. The first one manifested indeed at the 74,000 region. The second one was also a pending argument or case study after new developments in the price action. Therefore, is this idea completely erased? Yes. Why? Because if we go from this chart, once again, from January 21st to the current information, based on the same chart, this is on Coinbase, on the 3-day chart. Let's revisit this chart to remove the variables and see if we were completely wrong or not, okay? Moving into the same chart, once again, conditions, January 21st, from the highs, another important levels. Many all-time high callers were presented at the same highs, my friends. Before, of course, ignoring, right, what is a 30% correction. However, that could have cost you a significant amount if you were expecting back then a new all-time high. However, what occurred? A 30%, 32% decline before finding support, okay, at expected zone at the B point here. Without any data points, we knew that that potential area was a support within the 70 region, mid-70s, okay? Now, where did I get wrong is here at the C leg, because the highest point this ratio can go is to the 0.886, okay? So we are slightly above, okay? The first one was an idea into the 50% correction from the A to the B, the fib retracement, or the 0.618 as a key technical level. Once breaching the key technical level at the 0.618, conditions change, and therefore we aim for the fib, the deepest areas of retracement, okay? And those ratios, as you guys know, go from the 0.886, the 0.786, okay? 1 second. The 0.886 for deepest areas of retracement, applying the harmonic ratios, goes from the 0.786 and the 0.886. Once breaching above these levels, we then have the 100% move and the extensions, of course, okay? So therefore, now, instead of a BOD, okay, are we going to print a cipher or a shark? A cipher can be already in at these levels. However, the C leg on ciphers ranges between the 1.13, the 1 to 72, and the last one at 1.41 for this idea to be valid, assuming that the C leg is now completely violated for a BOD. For those harmonic patterns who understand the ratios, these are the same conditions, basically. A variation of a BOD or a Gartley is either a cipher or a shark, okay? For a shark, we have the 1.618 as the highest point, and then maybe a correction. But I don't want to speculate much on this idea anymore until new datasets are presented in the price action. which, by the way, the new information that we presented already, is the inner trend line or the midline for the Pitchfork channel based on the research of Andrews Pitchfork, okay? As well as the upper trend line of this trading range, a major one. The first test, the first attempted rally is encountering some turbulences, okay? What I'm looking here on BTC is now the either, depending on the close, on the weekly session as well as the 3-day chart that closed tomorrow, okay? We know that this shark now, that is presented here, we know that this shark, the PRC, the potential reversal zone, ranges from the 0.886 harmonic pause. There was indeed some turbulences, but not significant correction. This is why our argument for the C leg in that range was potentially within the cards, right? This one at the 0.886. When it goes higher, we do know that it's a cipher. I'm not expecting a major correction from here, but we never know, my friends, okay? I don't want to speculate much on this idea here, but going back to the current information, the shark pattern can range. The last one will be at the 1.13. Can we test the 1.13 this weekend? A long weekend? I wouldn't be surprised knowing that the 1.13 is a failed wave for a shark pattern. However, if we have violation of this ratio, the last bearish argument for the bears is this W formation or a variation of a W formation. On the momentum indicators, we are testing overvalue conditions on the daily time frame. I believe there is a triple divergence, bearish divergence class A on the MACD, not necessarily on the RSI, other than overvalue conditions, but on the MACD, we can observe the triple class A negative divergence, okay? Higher highs in the price action as of now, okay? This is only presenting the technicals in the price action rather than being bearish or bullish, my friends, okay? So higher highs in the price action, lower highs in the momentum indicator on the daily time frame. Daily time frame is a significant time interval for at least some pauses. We also mentioned that depending on the new support levels, the shark pattern, okay, this will be ideal. I'm tracking either a short at the highs and then switching to longs if this is indeed a new emerging trend and we have a precursor of a bullish 5-0, which is the bearish shark pattern, where the support levels should ideally test the 0.50. Also, the medium line, not the middle, also the same, 50% or the 0.618. Now, of course, we have a slightly higher prices, 112. Can we test 113, 114? We will see, okay? If there is no major correction, I believe there has to be some correction if the daily time frame is respected, given the conditions on the negative divergences on the daily, triple divergence, significant on the MACD, and also the failed wave, which is a 1.13. Already within the critical condition, in my opinion, as we're testing also the previous high from early this year, okay? Based on, once again, the previous chart right here at this highs from January the 21st. Everyone, I hope each one of you have a wonderful weekend. Once again, I'm not going to be bullish, bearish, only presenting the key technicals in the price action until more data present itself. Therefore, we can approach the market objectively, okay? We're not trying to react here that we know every single move in the price action. As we are seeing in the space, the industry is filled with pseudo traders and market commentators that clearly have no idea or no skin in the game. Everyone, I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Let me finish with this chart. Not this one, because I'm not suggesting that will be the case. But let's move into the current market information. Market generated information. Everyone, thank you for being here. I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers.